Monday the 18th, and we are in a tricky spot for the market here. It's trying to hold the volume weighted average price from the low that it's made this year, but we're clearly in a downtrend with a declining 20 and 50-day moving average, and the 200-day moving average trapped us overhead. Intermediate term, we're still below a declining 5-day moving average, but we're, still we undercut the prior low from here a little bit and are experiencing somewhat of a bounce. Not very convincing, up 15 cents today, but it could go either way, and I'm okay admitting that. I don't have to know what the market's going to do or have an idea. All I know is, at every moment, that is, I know that risk management is job number one, and that's what's more important than trying to act like you know what's going to happen the next day every single day, because I certainly don't. That's why I emphasize risk management on every single trade. We have earnings that are really starting to ramp up this week with some real big names. That could change things dramatically. We're still in a downtrend in the overall market, but it's going to continue to be a stock by stock basis, and that's where the emphasis will always be, is on the low risk, high probability setups, but recognizing again that in the S&P 500 in particular and the semiconductors, we're in a very important place where we could potentially rally from. And if we do rally, I still look at it as a rally in a downtrend. The Nasdaq also, undercut this prior low right in here, and we closed back above it. So, same kind of story. Now, it is technically a lower low and a lower high below a declining 5-day moving average, and that's the most important thing. The reason that I'm looking at it as maybe a place to turn around is simply that we've declined from 372 to 336, and typically, the people who sell down here are not the brightest group out there. The shorts who implement new shorts at that new low are typically not the brightest group of shorts. But again, we've got a mixed message, so we've got to just be cautious here. That's the message of the market. The Russell 2000 continues to be a laggard here, just kind of hammering away at this support with a lower high at the declining 5-day moving average. So that's clearly not helping things. It's stuck below the volume weighted average price from these two lows, the 50-day moving average, the year to date volume weighted average price, and that 20-day moving average. So this market, if we see it break this support in here tomorrow, I think that it's likely it continues lower. Semiconductors, this is really the bigger one, and I put that little video out there saying that, look at the pattern, that when the market sells off, rallies, then it sells off again and makes a lower low. What happened? Big rally. It sold off, made a lower low right here, we saw a rally. It sold off, made a lower low right here, and we saw a pretty good rally. It sold off and made that lower low, and then a huge rally. So we've sold off underneath this low, we've rallied up above it, and we have the possibility that it could do something like this. It's not going to change the fact that we're still in a downtrend, but if the market drops from 285 to 240 in just a short period of time, 17% or whatever it is, it's not the brightest group of participants that have their stop under here. Why wouldn't they have sold as it broke here or anywhere else? Other than that, why would anyone look to sell short on a breakdown like this? It's just plain stupid, uninformed, naive, whatever you want to call it. I'm not trying to be to be mean to anyone, but it's not smart. So we look at the declining 5-day moving average and we say, where were we 5 days ago? Well, this is where we were 5 days ago. So tomorrow this comes out of our 5-day moving average. What does that mean? That means if we are up in this general area, we're going to be above the 5-day moving average, and the 5-day moving average is going to start to rally. That could put us in a condition where it has the potential to see a counter trend rally. The primary trend is lower. A counter trend rally is not what we're looking for. We're looking for trend alignment. I tried the long side in here today, and it was a day trade that I regretted after that I even mentioned it on Twitter, because I don't like to mention day trades even in alpha trends. Why would I even do it on Twitter? So that was a mistake on my part to do that, but I'm trying to simply put out the scenario that, listen, I tried it. I laid out the potential that it could rally from here. I tried it, it didn't work, and I moved to the sidelines quickly. I actually made a little bit of money. It's not the point of whether I made money or not, it's the quick thinking and the ability to say, hey, wait a minute, I don't trust this thing. It still has a declining 5-day moving average. I've outlined a potential scenario. I talked myself into buying it, but it didn't follow through. So why on earth would I hold it? I wouldn't. That's the point. IBB continues to be, falling away just as, it's supposed to, really. It's in a downtrend. If they don't scare you out on the way down, they'll typically wear you out. This market might not make a lower low for the next 3 months. I bet it will make a low, and it might happen in the next 3 months or 6 months. But the fact is that markets like this don't just turn on a dime. They come down, they trick people, and they suck them in, and those people spit them out. It's a long process of accumulation. We have stage three distribution, stage four decline, and stage one accumulation. We don't really even have evidence that this is even accumulation at this point. The financials, they did see a little bit of a rally here today, but again, look at this market. It came down hard. It made a lower low, and now it's trying to stick in this area. It's probably sucking in shorts. We had earnings in here last week. Maybe it does this, and then it gets the next move lower. Markets do the obvious thing in the least obvious way. That's Linda Bradford Raskey's quote. I mentioned that over the weekend, but support here, resistance, resistance. Is this, this is a key level. It's got to get back above this level and hold there just to turn neutral, not to turn bullish, because the bigger picture is still clearly negative. We've got that declining 20, declining 50, declining 200-day moving average. This is an ugly, ugly mess. Why would anyone want to buy this thing? I certainly don't want to. Energy names continue to creep higher here. They're the only thing that's, gold, I guess, did too. But, things in uptrends typically continue higher. Things in downtrends typically continue lower. It's pretty